Spearhead Africa Asset Management rang the bell here at the exchange, and I'm here to sit with the CEO, that is Ngatia Kirungie, to understand for you and for you to as well comprehend what did they really do, what are they aiming at, and what does it mean as well for Kenya and the infrastructure sector in this country. Welcome to the Trading Bell. Thank you so much for joining us. Welcome to the show.
Thank you very much, Maina. Very happy to be here.
Same to here. And of course, you know, we rang the bell. It was an exciting day here at the market. And maybe before we talk about that bell, maybe we should just allow the viewers to understand Spearhead Africa. For the ordinary investor hearing about, say, for the first time, what makes this infrastructure an attractive asset class compared to the traditional investments? And by this, I mean the government bonds or listed equities.
Maybe I'll start off by introducing myself.
Yeah,
My name is Ngatia Kirungie.
Yeah.
I am the CEO of Spearhead Africa Asset Management. Spearhead Africa is a firm that was formed in 2015, prior to which I worked with Goldman Sachs in London and in New York. And before that, I was right here with Standard Bank. Then it was called Stanbic, CFC Stanbic at the time. And at Spearhead Africa Asset Management, we are mainly focused on alternative investments, beginning with our first product, which is the Spearhead Africa Infrastructure Fund, which you said, like you've just said, we listed on the NSE just a few weeks ago. Yes.
Wow, thank you so much for that. That's a decade plus, which is good enough for experience. So on the bearing in day, we witnessed a lot of institutional investors, and notably, we also had international partners, including the UK Mobilist program. So I wanted you to highlight, what does this mean and what does it mean for the market?
We are solving two problems concurrently. The first one is, if we look at the general market or the borrowers, you find infrastructure developers in our market have been forced to either borrow in hard currency, so in dollars or euros or yen. And what that does, it creates significant FX risk, currency risk. So every time the exchange rate goes up or down, the amount that you're paying in debt goes up and down as well. So it's very hard to plan. And it can actually lead to situations where your business economics are totally destroyed. If the exchange rate goes from 130 today to 200, who knows how much you'll be paying in terms of interest expense. The second challenge there was that these same infrastructure developers, if they're not borrowing in hard currency and they borrow in local currency, that's usually in a very short tenor. So these assets are long-term assets, 15, 20 years, but the longest tenor debt you can get from banks is typically between 5 and 7 years.
You're right.
So it creates a lot of refinancing pressure. You essentially have to make the economics work in a very short amount of time, in 5 years instead of 15 years, which can only happen if you increase the cost to the end user. So it makes infrastructure very expensive. So that was one challenge. The other challenge we're looking to address was that on the investor side. So investors right now are looking for diversification opportunities, diversification away from just the traditional stocks and bonds. And they are interested in infrastructure and the attractive returns that infrastructure can generate. However, the question was always, how do they participate? And the instruments did not exist to allow retail and institutional investors to participate in this infrastructure investment. So we solved both challenges or both problems through our locally regulated, local currency listed infrastructure fund that provides to these borrowers long-term loans in local currency and provides the investors access to these infrastructure opportunities that were previously unavailable to them.
And I think I want to just paint a color to it first, because we have seen there's a lot of demand. I came from a MICE conference. In fact, when we look at the tourism sector in the country, there's a lot of demand for infrastructure of that level that can host conferences. When we look at the water infrastructure, there's a lot and an area of that. And some people may not appreciate the need, but looking at how the population is growing, definitely there's a place for all this. Do you have some areas that you're eyeing at? And I know probably I'm jumping the gun, but probably so that people can understand. And for context sake, when you talk about SAIF, we're talking about Spearhead Africa Infrastructure Fund.
Yes.
Go ahead. Yeah.
Well, I think the sectors are simply the various sectors that our economy runs on.
Yeah.
Right? So you have everything from renewable energy in our country. That falls everything from solar, geothermal, wind power. You have transport and logistics, right? So here you have elements such as cold chain storage solutions, telecoms. So you have telecom towers and base stations that are required by the telcos. Digital infrastructure, such as the fiber networks we all rely on, data centers as well. And to your point, even areas such as wastewater treatment centers and the like. So essentially it spans, we look at just about any area of the economy that produces long-term attractive returns through essential services.
Okay. Let's talk about what makes SAIF and if I may use the word attractive asset class, because, we are so fond of the traditional ones. I'm talking about the government bonds, listed equities. What's so special about this?
Well, if I can just take a step back and talk about why infrastructure in general is attractive, even before we talk about why SAIF is attractive. So the first point I already basically mentioned, which is diversification, right? And we all know this, the saying you should not have all your eggs in one basket, right? But it's not just about diversification for diversification's sake. Infrastructure also produces very attractive returns. And those returns are from, I mentioned, essential services that do not reduce in demand when the economy goes down. So they stay essential. You always need to power your phone. You always need to move your goods across the country and the likes. And so these returns are very steady, they're very predictable. And when you think about long-term, inflation is a very important consideration. And the returns are linked to inflation. So if inflation goes up, your returns also go up as well. So you're protected. And that's different than what you'd find with government bonds. Now to SAIF in particular, what's really attractive is, like I mentioned, is access to infrastructure, which was previously unavailable for most investors, right? And we're doing this through a regulated vehicle that is transparent, that is tradable, and hence allows investors to essentially not be locked in, to hold the units for as long as they wish, and to essentially risk manage for themselves.
I like taking the seat of an investor, and probably even a first one who's probably thinking, okay, that sounds interesting. When you say it's an infrastructure that is tradable at the NSE, could you expound in a layman way for someone who could be watching and saying, okay, I'm interested?
Sure. So traditionally, infrastructure funds would lock up your capital for a long time. 7, 10, even 15 years. And that lack of flexibility has been a very strong deterrent for investor participation into infrastructure. And so by listing, we solve that. Essentially, by listing, we allow investors of both retail or institutional nature to invest and hold these units for as long as they wish. So you're no longer locked up. And this is especially important for individual investors who do not want to hold their capital for a decade, right? And so essentially by listing, you open up a new investor base for this asset class that previously had no access to it, right? And so now you have the opportunity as an individual with 100,000 to invest into infrastructure, whereas before you'd have to be talking about being in the billions.
Big money. Infrastructure projects are sometimes viewed as quite risky in a way. Some people view them as risky. Others say actually high risk is the word that they use. Maybe you could demystify that to them and how you're structured SAIF to ensure that investors are protected.
I think the first thing is to understand what our strategy is, right? So we provide senior debt to these projects. So when you think about the capital structure, we're at the very top. And that is the safest and most predictable part of that capital structure.
Yeah.
And below that, all the projects that we are investing in, the promoters or the owners have put in significant equity, which will absorb any kind of distress or any kind of losses before we are affected, right? That's important.
Yeah.
The opportunities we are looking at also are not speculative. So we lend against projects that have identified an off-taker or have some form of contractual off-take in place. So we're not blending, hoping you will build and find a customer. Then when you think about then we also have structural advantages or structural protections on the product itself.
Yeah.
So we control the project cash flows. We have elements such as debt service reserve accounts, which is essentially prepaid interest, as well as elements like step-in rights. And at the fund level itself, we have governance protections, such as the CMA and NSE regulations. We also have an independent trustee, a form of NCBA, and an independent custodian to KCB.
Okay. There you go. At least safety is very important for them. And even as we come to a close of the conversation, one of the key persons that I saw actually when you were ringing the bell, we had the UK's Mobilist as well, part of it. And I wanted to understand the context because, these are as well speak to what you're aiming at. So tell us more about that. What message does it send as well about our market?
I think it sends a very strong signal, very strong message. You take the UK government specifically first. It says their investment says a number of things. First, that our capital markets are functioning.
You're right.
Yeah. Second, that our regulatory frameworks are sound and credible. And third, that Kenya is a very serious development destination, development finance destination. So that provided that international validation, which is a very strong signal, especially when combined with the local validation from our anchor local investors as well. And so it sends a very strong market signal that this is a platform to be taken seriously by the borrower community and also for the investors to trust us with their funds.
Okay. And even part of the institutional investors that I saw pension funds as well, who have come in very close to you and investing even in this. Then it sends a message as well, because I see then a role, because we have a lot of funds seated because of the pension side of it. What role do you see them playing, especially now on the African infrastructure stage?
I think pension schemes will form a very central role, or they will play a very central role. But I would like to also extend that further to private capital in general. But if we think about pension schemes in our context in Kenya specifically, the pension scheme assets are growing. I think we're now at about 3 trillion shillings, and that keeps growing. And these assets are looking for a home, right? Beyond just the government bonds and the handful of equities that they currently participate in. And so there is a natural fit with what they're looking for and what we are able to provide, or what infrastructure is able to provide them, especially considering that pension schemes have long-term liabilities that match very well with the long-term nature of these infrastructure assets. So I expect to see these pension schemes and the larger private investors play a bigger role. We've seen it in more developed markets like the US, the UK, Canada, Australia, who have invested, who have allocated between 5 and 10% of their assets into infrastructure for decades. And we're slightly behind that. We're less than 1%. And the reason for that is not a lack of capacity. We definitely do have the funds and the ability to do so. It was simply the lack of product, the lack of the instrument, which we hope to have changed now with SAFE.
As we close, your low-hanging fruits, where do you see the most immediate capital injection places, and maybe 5 years from now, what do you see? What is in the future for Nasaif?
So let me start with your second question first, right? The region as a whole, so not just Kenya. The region as a whole has very high infrastructure financing needs. That represents a massive opportunity for investors of all kinds. So our plan, already our mandate is East Africa, right? And we're already seeing opportunities from Tanzania, Uganda, DRC, Rwanda, in areas like renewable energy, in logistics, and in digital especially. Just consider anything that is essentially a sunrise sector or a growth sector of the economy.
Yeah.
And so, our plan is to grow safe with, being very diligent, being very protective of investor capital, and to become the go-to platform for investors and for borrowers in our market. And that touches to your first question of where do we see the opportunities. I mentioned very broadly the sectors. But in terms of the biggest need, you will find right now there's a lot of need on the power side, the renewable energy side I mentioned, as well as digital. Which, I mean, we see what's happening with AI all the time. And finally, telecoms. Those three areas, we need to communicate with each other, right? And so those are three areas of very, very high growth and very strong, attractive returns.
Wow. Ngatia Kirungie, thank you so much for your time.
Thank you very much, Maina.
Absolutely.
It's been a pleasure.
There you have it. That's the CEO of Spearhead Africa Asset Management. Ngatia, very optimistic about building, especially our East Africa region infrastructure and even the region at large, as he has said. And it's true, by the way, when you come to think about it, there's demand for these things. Part of the Trading Bell is to humanize leadership. Let's get to know one or two things about our guest today.
This is Ngatia Kirungie, the CEO of Spearhead Africa Asset Management, and I'm on the Trading Bell. First job you ever had? My first job was at a local brokerage house called CFC Financial Services. This was back in the early 2000s. And I was a research intern, and my job entailed going through the newspapers every day and finding any article that had any kind of relevance to the stock exchange, cutting out that article, sticking it into a scrapbook, and handing it over to the head of research, who I doubt would ever read them, but gave me a very good foundation in understanding our markets. What's the most unusual or interesting hobby or passion you have outside of work? About 2 years ago, or slightly under 2 years ago, I started calisthenics. And calisthenics is essentially body weight exercises. I've been big on fitness all my life, and I thought having gone to the gym for 10 years plus meant that I was a strong and fit guy. But I was quickly humbled by some of the moves and some of the requirements of calisthenics, including not just strength, but also coordination and balance and the likes. I do it to this day, and I find it very, very challenging, but also very, very rewarding. What's your ideal weekend getaway? City lights or countryside peace? Or countryside any day. With the work that we do, it's always non-stop. It's always go, 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 go. And so having the chance to just be in greenery, be around water, around wildlife, just around nature as a whole is very replenishing to the soul. What's harder, starting a company or sustaining one? Both are difficult for different reasons, but I will say, starting a company, you can look at it just purely how do you start a company. Thankfully, that's not very difficult. But the difficult part is what are you giving up to start that company, right? In many cases, you may be giving up formal employment, or you might be using a significant amount of your own savings, and that can be quite hard. But once you have the company, sustaining it now becomes the real challenge. Ensuring that you are providing the market something that they actually want at a price that makes sense for them, managing a team, staying current with all your obligations, whether that's tax or regulatory or anything like that, while at the same time keeping yourself sane, because it's not easy running your own business, and you can quickly get stressed or burnt out very easily. What's your favorite way to spend a quiet Sunday? I would say with family, and that changes from being a quiet Sunday to one that's pretty rowdy and active, with young children around who always want to play, but also getting to spend time with my siblings and my mother. It's also very, very, I find it very, very soothing, and is something I really enjoy doing every Sunday.
Asante sana, I leave you now with the markets.